There are days when the market just makes 0 cents. Price is choppy, no clear trends, and fake outs, well, they're everywhere. And those days are the days most traders either lose money or sit out completely. But I have one strategy I go to every time the market feels like that, and it saves me from countless bad trades. It's not indicator based, it's not reactive, it's built entirely around what the market is trying to do, which is trapping people. I wait for one thing: where are traders being baited in, and where is the liquidity building up? That's where smart money is targeting. Once I identify the trap, I look for clean break of structure in the opposite direction. That gives me all the confirmation that I need, even when the chart looks messy. This strategy has kept me grounded even on unpredictable days. It gives me clarity, patience, and more often than not, solid results. If the market feels like nonsense lately, this is the approach that brings everything back into focus. There have been days where I lost the first trade, then hit this setup and walked away with 4R and more, calmly just following my system. In this video, I'm going to show you one of those exact trades where the day started rough, but this setup came in and turned it all around. It's not about never having bad days, it's about having a setup that shows up anyway. So let's get straight into it. Strategy can be absolutely life-changing, and I don't want you to miss out on this, so you should definitely watch all the way to the end of this video to get the full walkthrough of the strategy. And again, if you want us to pass and manage your funded challenge and get your payout guaranteed, click the first link in the description. Now, the best part about this service is that you don't pay a single penny until you actually do get a payout. So again, you keep 70% of the profits, we take 30%. So just click the first link in the description and we'll explain to you how the entire process works. But let's get straight into this. So this strategy is so simple, and again, you can make quick profits day in, day out. So here we go. So again, like I said, it's very simple, and we'll be using the Fibonacci for this strategy. So things we should know: it's on the 5-minute time frame, it's on UTC minus 4, which is New York. UTC minus 4 New York time, really good. Then we also have the Fibonacci, so we'll just put Fib 62% zone, which is better known as the golden zone when using the Fibonacci. So those are the very basics. Again, we follow the 3-step model, which is liquidity, and then we have our market structure shift and so forth. So basically, very simple. What we're going to be looking for is both sells and buys of the strategy. It can be traded every day, only if the setup aligns. So let's say we have a liquidity sweep like this. Boom, very simple. We have a market structure shift with displacement just like this. And again, guys, even better than the strategy, if you just click the first link in the description, will help you get a payout and you don't have to do any trading. But once you have the market structure shift and the liquidity sweep, you want to take your Fibonacci and you want to mark out the 62% zone. So it will look just like this. Our stop loss, it can go just above the high or a little bit just to avoid spread rates. Just like this. And what we'll do, we'll target 1 to 2R every single time. So 1 to 2R, I find it when I'm doing my trading is very consistent, and I do guarantee that 1 to 2R can help you become a profitable trader in a matter of time, in even less than a month. So if you do follow these strategies, you target a consistency of 1 to 2R again to your initial stop loss, then yeah, you'll definitely be able to make tons and tons of profit on ends. But let's get straight into this. So once price actually retraces into our entry point, now we're going to wait for price to start moving. Price can do a number of things now. Price can start moving towards the downside or potentially go into our stop loss, but you know, our expectations for it to move towards the downside. So once price actually starts moving towards the downside, we're gonna have a stop loss rule of once price crosses 1 to 1R, then we'll move our stop loss at break even. So as you can see, price crossed 1 to 1R there, we move to break even, and then it starts to initially move towards the downside. And when it starts to move, as you can see, it heads straight to 1 to 2R, and we then profited on that 1 to 2R margin. So that makes it risk free, and you still end up getting profits at 1 to 2R. So it's a win-win trade. But again, really simple. I want you guys to watch all the way to the end of this video, because even better than the SketchUp, we're just going to get into some, market examples now. Again, the 5-minute time frame, UTC -4 New York, and we'll be using the fib 62% zone. So let's get straight into that. So let's just come to the charts right here. Let's just do that. As you can see right here, we're just gonna backtest this model because it works very, very good in the markets. So as you can see right here, we just allow the market to do whatever it wants. If it wants to go up, it can go up. If it wants to go down, it can go down. So we'll start looking for a strong market structure shift with displacement. As you can see right here, we got displaced by the body right here. So what we'll also do is look for a liquidity sweep. Right over here, we have a liquidity sweep. We have a liquidity sweep of this factoral low right here. And we can see how the market is now reacting to coming into this level. So what we're going to do, we're going to mark from low to high. So we could initially get that 62% zone. As you can see, it came to the 62% zone. So following our rules for entry, again, we should have a minimum of a 5 pip stop loss. 2.4 pips is quite small. What we'll do, we'll move our stop loss to 1 to 1 hour, and let's just see what price is reacting with. So as you can see, it heads to 1 to 1 hour. Perfect. We're now at break even. It's now a risk-free trade, and we could take it to the next level. So let's see how it plays out. And as you can see, it does end up hitting take profit in the end, just like this. So again, very, very consistent strategy. You'll be able to take trades day in and day out, again, if you watch all the way to the end of this video. So let's get into the next level. So as you can see right here, coming to the next level, very simple. As you can see, both days we did Monday, and then there's Tuesday. So let's just see how Tuesday actually ends up playing out. Here we go, and boom. So now we're at Tuesday. Again, following all the rules, you want to have your market structure shift with displacement. You want to have your liquidity sweep, and if possible, rejection of the low or high. Again, we're on a 5-minute time frame, and let's just see how this does end up playing out. So if we go and we just let it play out, as you can see right here, price is doing its thing. And then we have a market structure shift right here. So following this market structure shift, what we'll do, we'll take the Fibonacci, we'll mark from high to low. We'll go short position. Wait. We'll go short position. We'll put our stop. Yo. I'm recording. Give me 2 seconds. I'm coming. Okay, we'll go short position just like this. We'll put our stop loss just above, as you can see right here. So let's wait for price to actually enter. As you can see right there, it does enter. What we could do, we can move to 1 to 1, and we just let price do its thing. Boom, boom, boom. We wait for it to cross 1 to 1, and boom, it does end up crossing 1 to 1. So now we're at break even, and we let it play out to 1 to 2 hour. Boom. As you can see, it does end up doing it. No. I jammed. Feck. So at this point, we're gonna let price do whatever it wants. If it wants to go up, it can go up. If it wants to go down, it can go down. But as you can see, we have a market structure shift right here. So with that market structure shift, what we can do is we can mark out with the Fibonacci, just like this. Boom. So we can enter at the 62% zone, put our stop loss, maybe at 4 pips. It should be a minimum of 5, but in this case, 4 pips is fine. What we'll do, we'll target 1 to 2 hour, and as you can see right here, we just let it play out. Boom. It does end up hitting take profit. So I hope you guys did enjoy this video. Don't forget to like, comment, subscribe, and I'll see you guys in the next one.